So let's touch base with the management of VKS Projects. It's an EPC player based in Maharashtra, and they are coming out with their initial public offering, looking to raise about 55 crores. Mr. VK Sukumaran joins us on the show right now. The issue, of course, opens today, a small issue. Mr. Sukumaran, thanks very much for speaking with us. What are you looking to raise these funds for?
See, the thing is, VKS Projects is our IPO. So 55 crores we are raising now. In this 15 crore is going for our working capital. Another 22 crores for our capex, that is plants and machineries for the industrial construction. And around 10 crores we are putting up around 5 branches all over India, all over major cities, and balance into the IPO expense and to the miscellaneous and
all. What's the order book position as of now, and what are the plans on that front?
Yeah, see, briefly, VKS means we are into EPC industrial infra. Major, we are concentrating on the specialty job like the piping and alloy steel and critical like reformers and connector projects. Our main clients are based on like Thermax India, Deepak Fertilizer, and Reliance and Aditya Birla and Tata International. And BLA Power and all. So in almost all segment we are working now. Our order book in hand is around 98 crores as on December when I filed the RHP, and our turnover was that time also around 97 crores into that.
So how have you seen the growth over the last few years, and do you believe that in the next couple of years you'll be able to maintain the growth rate?
See, last 3 years is the Kargi is almost moved into 106% and the PAT into 150, and our earning before tax coming average into 12% and to PAT into 6%.
Okay, so in which case, did I hear you say that your PAT has grown at a rate of 150% CAGR?
Yeah, see, last 3 years, so that's why the average, if you look into this, it's around 6%. And after the IPO, this all backing like a machinery, our own machinery, and adding the fleet, and we can have a bigger jobs in hand. See, the thing is, we are into the, at present we are taking a middle type job, medium type job, like means into 6 to 12 months period. Now we are not entering into the very large projects like a 3-4 years. And this is the routine going on, adding every month we are adding new projects and finishing, and this will give me a lead to the 3-4 folders, this IPO, this supporting like, the localized office that can capture a lot of business in the localized. Yeah.
Okay, in which case 2 questions. One is, what does your debt equity ratio come down to after the issue, assuming that it's fully subscribed? And what does the promoter holding come down to?
See, this at present the equity ratio is 1:1.03, means almost 1:1, and the equity add-on, this one will be drastically, it will reduce, the debt side will be minute over there. And we are diluting now in the market, we are diluting to 53% to the public.
Right. I was just looking at the rating that CRISIL has given you. It's 1 on 5. How would you react to that?
See, the different agencies, we had gone with only one agency, that is a leading CRISIL, that is in India. So, we had gone with one agency only. They had given a rate 1. See, we have to admit that we are into the middle level infrastructure companies, and it is a growing company, and in that they had clearly they mentioned in the CRISIL rating also, they mentioned we have completed more than 40 projects without any hurdles, no litigation, without any hurdles. We completed the 40 projects, and we are now qualified for the higher capacity, like 550 crores projects as a single order and all. Now we are having, so it can be go for another 70-80 crores. So these are the advantage they are given. Then the CRISIL, the rating side, if you go through the NDR one, and see in future it will prove it. We will be gathering on that.
Okay, I still didn't get the answer to my question.
Yeah.
What is the promoter holding after the issue?
Promoter holding will be 47% after the issue.
From the current holding of? Current
holding of 100% means our own 100% it will come.
So you're diluting over 53% by the issue.
Yeah, yes, sir.
Why not take debt at such a time then, Mr. Sukumaran? If indeed the company is growing so well, why do you need to dilute 53% of the holding?
See, the thing, this EPC contracting company that we into the industrial EPC, that we a specialized one with VKS. Now the debt only won't give this listing of the company into the capital market. This is the giving a clarity to the business. Wherever I go, the clarity to the business, the listing of the company coming to the capital market. this will give my investors support, and this will give me second level, and the middle level, medium and long term investor will support me, and instead of going for a debt, and the company will get another recognition for the bigger jobs, and that is the growth of the company. Any company in Indian capital, that's my view, that listing of the company into the stock market and coming to the capital market, it will give a real identification of the promoter as well as to the company growth.